Well, thank you everyone for joining us this morning. My name is Tangela Davis, and I am joined by my colleagues and General Fund Manager for the AHP program, Stephen Makovich, Alex Fitzgerald, Edgar Burciaga, and Dimitri Defteros. Again, welcome everyone to our 2026 AHP webinar. We're going to get started here in just one moment, ensuring everyone can see everything here.
Okay. Um, okay, everyone. Good morning. My name's Stephen Makovich, the AHP General Fund Manager, and I'm going to be helping out with the webinar today. If there are any questions, please put them in the chat, and we'll try to do our best to handle it. But if the situation is really project specific and there's a lot of variables, we're just going to reply, please call us or please email us, and we'll go from there. Okay, this is our agenda, what we're going to go over. It's just going to be the updates, how to prepare an application, what are the requirements for eligibility, your capacity, do you meet our financial metrics? How do you score? And the word modification, and then this Q&A, but probably most important will be the Grant Connects portal aspect of the system. Well, we were created back in 1932 as a product of the Great Depression, and we cover 5 states, New Mexico, Texas, Arkansas, Louisiana, and Mississippi. And best way to describe us, we're like a credit union for credit unions, a bank for banks. And whereas we might go to our local retail banks, for our banking needs, well, our financial institutions also need a bank, and they come to us. Okay, this slide, goes over everything we do. I mean, this has grown over the last 10 years, but we are solely going to focus on the yellow. Okay. Big picture, well, bad pun, it is a big picture. However, the application window is going to open March 31st and it's going to close April 30th. So those are the dates. And we were going to do April 1st. However, there was concerns that it might be a joke. So we just scratched the April 1st. So it is March 31st, and I had to sneak that joke in. My apologies if it was bad. Okay. So here we are for 2026. The maximum subsidy remains the same at 1.7 mil. Now, your maximum subsidy per unit that you could request is 45,000. Um, some changes we've made with if you are going to try to get homeless points, one, we're going to want to see that your experience working with the target population. However, if you're like, for example, trying to do a scattered site project where you want to do a homeless household scattered around, we're going to need to see some evidence such as MOUs, service plans, something showing that the individuals that you're going to house, they're going to have access to services and they're going to be taken care of. And like always, the need for subsidy, we're no longer doing the pro forma or the debt service. It's just going to be the gap on your sources and uses of funds. Um, Economic opportunity, we do have MOUs on our website and we like to see them. And the reason why we're having that, because I also oversee the monitoring, and what we're experiencing is when we're going back for projects, near or at, completion, we're receiving a lot of replies that we weren't aware of the services or we didn't know how we had to do them. So this is going to be something in writing that we can monitor and everyone could be held to, and hopefully that would get to the monitoring aspect. What we do have available is we do have a standardized development budget on our website. Now, that's going to be a format that you're going to use to complete the development budget within the application. When you do the application, you might say, I don't see a page for the uses of fund, the uses, the development budget, but it's going to be the uses of funds page. And then, this presentation, the first question we get is, can we have a copy of the application? The webinar? Yes. Just send an email to ahp@fhlb.com. And just note on one of the last slides, we will show this. And really important is the Grant Connect registration that I will spend some time on. Okay, key points. Key points is we're no longer having community stability. That has been removed as a scoring criteria. Now, we did update the preservation definition to include a 3-year timeline where we're including 1 year prior to the application date and then 2 years after the application deadline. So that has been changed. And key thing to note is we've increased the maximum threshold for the subsidy per unit, which is 35,000. Now, 35,000 is what you could do to get the maximum points. But you could do $45,000 per unit if you choose, but I will cover that later, how there might be an issue with your scoring. Okay, last year, it was a record. I mean, it wasn't a record in terms of applications received. We did receive 126. And we did award 73.5 million. But where the record came in was 53 projects for 3,700 units of housing. The approval rate was 42%. And I do point out is over the years, we have had people like, well, if I can't score a certain number, I'm not going to apply. Well, probably a number of them would have had a good chance to be approved if they would have submitted. So don't hold back because you think your score is low. As you look with the 42%, we were close to 50%, and that was one of the highest in my 20 years here. Okay, here is the breakdown by state of approved applications, and pretty much they range from 50% down to 30%. But it was good that we had a good good number of approvals based on the applications submitted. Okay, this is, are you a member? Are you a sponsor? That's the big question we have. And the best way you hear about it is, in just layman's terms, it comes out, we need a member to sponsor the project. Another way to say it is you just need a member to support the project because the sponsor is going to be the one like submitting the application or doing the or completing the application. So that's the sponsor in the true sense. Now, a member is going to be the one that's actually going to, which is actually going to do the application submittal. So keep that in mind with it. Okay, give me a second. And again, if you had to take away anything from this presentation is you cannot apply without a member. Okay, what are the benefits to a member? And is asking, Mr. Member or Miss Member, why should we support an application? Well, it comes down to one, it improves your reputation in the community. CRA is very important, so you get credit for that. And it just creates opportunities and new relationships. And one of the ways I like to summarize it is you could be located in an area where there's two banks. One of them's a member, or they could be a member, but they don't participate, and you participate. Well, if you get projects approved or use our other programs, you get publicity that's positive, and you might get more customers realizing that they want to be part of your bank and get some business for you. Okay, now the role of the member, this is what we would like you to do. One, we'd like you to be involved in knowing the sponsor and knowing the project. We're really trying to avoid the sponsor submitting an application and you're just approving it without looking at it. We want you to really get in there. Um, the good thing for the member is the application deadline closes at the end of April. We recommend that applicants get you the applications a week before the due date so you could review them. And then throughout the life cycle, you're going to be involved in reviewing and approving compliance reports, disbursement requests. And then I think the really other thing, when you have that conversation before to submit the application, you need to go over what are your expectations for the program because you are the member. And again, without the member, there's no project. So this is the opportunity to set your expectations. Sponsors. Okay, well, the first thing we would like for you to do is create a thorough application and provide supporting documentation. And you are going to understand that there's compliance. And the third bullet point is interesting because we need to know if there's changes to the project, like if you had to cut units because of cost, or if you lost funding, you can't do as much, let us know. And finally, all the documentation has to be submitted on a, got to be submitted timely. The one thing I do want to point out with the application, if you started 1 day or 2 days before the deadline, you're not likely going to finish it because we added some required characters to like use of funds and your pro forma, how you come up with the numbers. And also, when you upload files, like you have to give a file name and the description. So if you're used to saying this is similar to other projects or I got estimates, it's not going to work. It's going to be around 250 to 300 characters on your uses of funds explanation and your operating performer explanation. For the required docs, you're going to have at least 5 character file name and 10 character description because I'm trying to streamline this operation and we're trying to avoid understanding everything being submitted and getting a 1,000 page PDF and trying to figure it out. So please note that. Okay, what do we look at the application? Well, we look at the scoring, but before we even get to the scoring, we're going to look at the sponsor capacity. I mean, do you have site control and zoning? Is there demand? I mean, does this project work developmentally? Like, does it cash flow for 15 years? Very important. And the other thing we built in the application where if your cash flow goes negative, like in year 13, 14, you're going to get a hard stop and you won't be able to submit the application. So again, make sure you do this and don't rely upon us to correct it for you. Okay, this is a really important slide, so I will go over this in detail. Just to apply, 20% of the units must be targeted to 50% or lower. That means you could do 20% very low income and the rest market. And that is fine. You need to be doing acquisition, construction, or rehab. And the third bullet point, we need to see the need for subsidy, which is the gap between your sources and uses. And the one I have bold is you most likely to draw down your subsidy within 12 months from the data award approval. Now, what that is you could submit an application and have none of your funding secured, but you got to have it at least identified. After 12 months, we're going to look at, is this project moving forward? Because if not, especially after 18 months, we're going to look at withdrawing the commitment, possibly. And the only way we really look at it after 12 months is like maybe you secured all the other funding and you're waiting on confirmations, from some others. But this is something that it's not a strict one-all for everyone. We kind of go on a project by project basis, and it just goes off of, okay, oh, there was one question here about the percentage of households that must be for owner occupied. If it's owner occupied, you can only do people below 80% of AMI. Only 80% of AMI. Okay. The fifth bullet point, sponsors, we'd like for you to have experience and have worked on previous projects in the past. And there's times sponsors have really no experience or very little. I guess the term now is immersion developers. Well, if you have a board of directors that are heavily involved, or you have consultants, all that is factored in. It's the thing is it's like we're not going to say, okay, this is your first project. We're just not going to yank you and kick you out. No, we're going to look at all the factors. And the key thing, two things for home ownership projects. If it's first time home buyer, like home purchase, there's a 5-year deed restriction that's attached to each property, and that is forgiven on a month by month basis over 60 months. Now, for the deed restriction for rentals, it's a straight 15 years and we are married together, but there's no forgiveness year by year. So year 14, there's compliance issues and you can't fix it. And let's say we get into like possible recapture, it'll be for the whole grant. Okay, this is one of the first of the helpful hints. If you have existing projects or previous projects that are not in compliance, it's best to get them corrected before the application due date. Okay, I like to say we do a little bit of everything. We do multifamily, SROs. We could do the micro homes, congregate living or group homes, transitional housing, or even adaptive reuse. So those are all the programs we do. And if you're not listed on here, again, we have the chat, or you could reach out to us really to discuss it. Now, this is what I say, it's the good and the bad. Okay, the bad is we are not going to be able to fund your contingencies. We cannot fund your operating expenses. We cannot fund your supporting services. If you have to relocate people, that's on that's something you would have to pay for. And we cannot fund any reserves. Like, you might have to require to do an operating reserve or an initial deposit for replacement reserves. You just have to know that we don't do that. What do we do? Acquisition is a possibility, but this is something we might need to have some more one-on-one conversations about. We like to fund our, the sticks and the bricks, because those are easy to document. And when we do disbursements, because you could think of us as a reimbursement lender where we reimburse, it's just easier. Now, there are cases where we might fund the whole project. And if that's the case, we could, fund like architects, engineering fees, and consultant fees. That's something we could do. And probably we should discuss the requirements more if you are going to be submitting an application for that. Market study, I mean, the best way we kind of look at this is we want to know that it could be occupied and you have local data to support it, that it could be absorbed within a year, of it being built. And we also want to know that there's nothing nearby that could really compete or really make it hard for you to hit lease up. I mean, those are the key things with this slide. Project cost. Well, the only thing we do know for certain this year is costs are getting higher. Property insurance is getting higher. So, but what we do is when we determine what our reasonable cost, we go by each state in our district, like the qualified allocation plan or the document that supports the LIHTC applications. Now, Texas is a little different. We don't use their QAP, but we get their average construction cost from the previous year, and we kind of look at those numbers. The application is not going to tell you what's the specific number by state, but you could reach out to us and we could give it to you. Now, if your project is like it's out of district, like we had one last year in Colorado, we will utilize the cost guidelines set by that Federal Home Loan Bank district because there are 11 of us nationally. Okay, sponsor capacity. The key takeaway from this slide is we had changes in the regulations where we have to look for covered misconduct. Covered misconduct, I mean, in layman's terms, is you haven't done anything bad, or you haven't have issues, or you don't have the IRS coming after you, or you've been not compliant with grants. But the official definition is within the 12 CFR Part 1227, and you can find this information using the two links below. Now, one thing I do want to point out, this is going to be for sponsors. When you are either completing the application or reviewing something that your consultant did, before you get to the button where you have to submit to the member, there's going to be a button that says yes or no. If you hit yes, you're going to have issues, but the best selection is to select no. Another helpful hint. Okay, this is an example that if you're approved, you are going to, receive an award letter. And sometimes you might get those real big, paper checks, that we awarded. Now, well, I had an issue once where I tried to deposit one of those checks and it didn't work. So just wanted to point that out as an example of that you might have that check, but at disbursement, we are going to reevaluate the need for for the subsidy as well as initial monitoring. So please keep that in mind. This is a three-step process. Can you complete the project? No, really? Are you able to do all the responsibilities within the 15-year compliance period? Um, you're going to have resumes, you're going to have people involved, and you have the financial capacity to complete the project. That's why sometimes we review the audited financials or we look at the performance. Now, below that, where it says supporting documentation, is the resumes or project leadership and fact sheets are really good. We like charts, especially if it's a LIHTC deal or something with general partners, limited partners, or new market tax credits. Um, Good summary of what you've done with previous projects, but then that goes into the one below it, showing that you have a development team that's really going to be strong and going to support you. Now, third helpful hint, if you are an emerging developer or this is your first project, please contact us because we like to help. We're very responsive. Okay, this is one of my favorites, site control and zoning. Okay, you must have site control. And site control could be a deed or a contract to lease, purchase option. Now, if it's a purchase option, the option needs to go through at least December 2026 to make sure that because we make the award announcements in November, so we're going to do that. An executed settlement statement. Now, the key thing is you might have a contract to purchase, but it needs to be signed by the seller. So, and we had some issues last year where organizations were trying to donate land to a project, but they didn't have the land, they didn't have title to the land to donate. So keep that in mind. Zoning. We want the zoning to be done by July 31st. So you do have some deadline. And the key to zoning, for me being an urban planner, if you don't have zoning, you can't build. So that's something really to consider. Rental rehab projects. I'm going to go a little bit slow here because there's a lot to go over. So really with the first bullet point, we need to either see a bid or a physical needs assessment. And what we're going to do is the cost in those items should be very similar to what's in your development budget. Because we want to see that one, you're doing the work that needs to be done and the costs are reasonable. We're going to need to see the pictures showing the condition. Very important that you show backup documentation. Now, the third point, if we represent more than 50% of the total funding or even 100% for rehab, we are going to require a pre and a post inspection that it's not going to be related to the sponsor or the developer, and we want the member involved in this scenario. As we don't want a friend approving the cost because you're friends, we want to make sure it's a third party really assessing the cost. Important. Yeah, the budget, or if you are going to be submitting like multiple bids or invoices where you're not using a general contractor, please prepare a ledger as it's going to be hard to go through multiple bids. And if it's not prepared in a readable format, it could impact the eligibility of your application. And General requirements, builder's overhead, and builder's profit. We need to see those numbers, and at times, um, contractors won't give it to you, but you need to give it because if you don't see it now, it's going to be required at funding. Now, if it's a small project where you're using multiple vendors, these smaller guys are not going to really be using it, but point that out. Or if you're serving as a general contractor, point that out so we understand. Okay, now comfort, helpful hint number four. Um, yeah, your bid or inspection, it's one of those that a contractor should be able to go out there and see and understand. Like I know Alex and Edgar have some experience with construction, so they should be able to understand what's going on and what needs to be done. Okay, anything where you are relocating people, we need a relocation plan. And that relocation plan should have a cost to it. And it should appear in your total development budget. Now, if it's approved by the federal government, state, local, or anyone involved, we're okay with it. We'll accept it. Now, let's say you're using us or equity and you're like, Steve, I can't do this. Well, if you take the 4 points in that blue box and create a page for each of them, like a 4-page Word document, this summarize, the items under each question, each item, and that will work. Okay, the rent roll. This is for something where a project is currently occupied and there's not going to be any relocation. Now, what we're going to need to see that one, that if the project is 90 units, your rent roll should have 90 units. We need to see the current income of the tenants. And just to note that we will sample 10% of the units to find out what is the income, what are the households, how much they're being paid in rent. And we will provide an Excel file or reach out and we could give this to you of the information we're going to look for. Okay, this is going to be a little confusing topic, but if you have a project where people have been living there for like 10, 15 years, and you are applying for our funds, you are going to have to recertify them for AHP eligibility. So you might have collected income back in like 2015, 2014, but you are now going to have to recertify them for our eligibility. Now, just note, I always say that we're spelled FHLB Dallas. We're not spelled like TDHCA or, Louisiana Housing Corp or New Mexico Finance Agency. We are different. We have our own requirements. So please keep that in mind. And now I'm going to provide a little of example of this. This is of a project placed in service in 2011, and their compliance period is about to end. And you said, I want to work with Alex or Edgar or Tangela on doing an application, and you do that. And then you're lucky enough to be awarded a grant in October. And with project completion, now you have to recertify. I know this is a lot, and I always say if we can answer it in the chat, then we could have a good conversation about it. Okay, now I'm going to do a little case study of Cobblestone Farm Community. This was a project, and I also want to point out our director, Greg Hedrick, and I waited to the slide because he is pictured at the bottom, giving the speech. So this is an 89 unit affordable housing complex where 64 of the units were walk up and they had an on-site resident services coordinator. And This project was 100% for people at or below 60% of AMI. Um, I used to say back in the day when I started this, like you might have AHP grant alone and some other like equity, and that was your project. Now, if you don't have more than five sources, it's probably going to struggle to be a deal. And this one had, funds for the Arkansas Development Finance Agency. They had our money, another grant, and home and National Housing Trust funds. And that gets into we are really a gap funder and we're really not a primary funder. I say that, but there are exceptions, and I think I clarified that early on. Oh, we got a good question here from Nicholas. Do we require the project to have another source of public funding? No, you do not have need another source of public funding. And then we have an anonymous person. For recertification, what is the benefit for the tenants? What is the history for them to be recertified? What are some incentives? Well, the benefit for the tenants is they're going to have updated units. They're going to be repaired. They're going to be livable. They're going to look nicer. For the second question, um, please email ahp@fhlb.com, and we'll be more than glad to have a conversation to really discuss the nuances of the question. This is, if you go to in the middle, the range and limits, these are our kind of minimal thresholds for targeting. Again, the 20% got to be 50% below. Debt service, there's no high range, just a minimum of 1.15. Replacement reserves, I mean, rehab 500, new construction 400. Operating expenses, the minimum number is 2,500, and operating reserves is the standard six number. Now, we have the 6 months highlighted because when you are working through our system, you might enter in these numbers, and then our system's going to flag, hello, Mr. Applicant, you are outside our threshold. And what you're going to do is you are going to provide an explanation. Now, if your explanation is like less than 7 words or one sentence, that's not going to suffice. So please provide, something that we could work with. Again, insufficient responses can impact the eligibility of your application. And then for cash flow, we have no cap anymore on this. So something really to keep in mind. The rents, um, again, high level, they shouldn't be paying more than 30% out of their pocket. But the nuance of it is this is based on the HUD definition of how it works, and it's really based on bedroom size. However, let's just keep it simplistic that it's really at 30% of AMI out of the pocket. And if you need a more one-on-one conversation of it, please reach out. Now, the second thing is very important. General requirements, overhead, and billers profit. You might list them. Okay, Steve, I'm going to give you all those numbers on an application, and we're going to be happy. And then you come in from disbursement. I'm going to be like, okay, we might have Dimitri working with it. He's going to be like, something's missing here. I'm going to be like, what? They don't have the general requirements, overhead, or builder's profit. We're going to be, uh-oh. And so we're going to say, well, we'd like to give you the money. However, we can't do it until you get us these numbers. And so it's very important. And then some of it, if it's larger projects working with the city, you might have it might be a sealed bid, and you're going to send us out a sealed bid. Well, if you don't instruct them to put this information, you're not going to get it. And developer fees, we have two kinds, one for like new construction or rehab, then a different one for act rehab. And the contingencies are the, standard 10% new construction, 15% rehab. Vacancies a little bit higher for special needs. And again, the soft cost. Um, we typically see this higher when there's 4% deals or there's multiple funding sources. That's when we tend to see this high. Now, another thing we've been kind of seeing is like if we see like a developer fee and a consultant fee, and if we just happen to put them together and it's coming around like 18 or 20% of the total cost, we are going to question this year a lot the consultant fees, what is going to be charged. There's some standard numbers, but if it's getting to be like 150, 300,000, and then the co-developers, the sponsor, I mean, the co-developer is also the consultant. He's getting part of the developer fee. We're really going to be looking at closely. And if it's really outrageous, and I can't say a number, however, we might reduce your subsidy. Okay, here's the best part. And I think this is all why you've been waiting here. And the scoring. Now, I want to beat you to the punch. What is a competitive score, Steve? And I'm going to say, unfortunately, I cannot release that information. However, please go back to the slide where I said we had close to a 50% approval rating in only 112 applications. There could have been a number of people, and it could be you on this webinar, who might have been approved, but you decided not to submit because you thought your score would have been too low. Okay, we have 7 buckets. No, it's the donated property, whether you're a nonprofit or government, targeting, which is 20% of your apps, underserved communities, economic opportunities, and bank district and community stability. Now, so it's based on 100 points. Now, if you score like a 90 or 95, you did something incorrect because it's not possible. And I used to think about this, I guess now we had the new Wizard of Oz, but where you're walking on the yellow brick road and then you're going to have 2 paths. Well, is it new construction or rehab? So you're going to take another path. Well, if you're taking the rehab path, you might hit a junction. Is it adaptive reuse? Is it vacant or is it demolition? Then you take that path. You are going to be taking a lot of paths in this. And so your score is really going to be based on your path. Now, if you come in at like below 30, you really have to try to get something that low. And so reach out. And the other thing, another takeaway, we are willing to do a review of your application, the scoring. Because last year we had a high number of applications where I took away points. And this could have been avoided if there was a conversation before the applications were submitted. And I guess I'll use this analogy is you might think that you qualify for points. However, it's like one of the things I do is I umpire baseball. So sometimes I'm calling the balls and strikes. And you have a lot of people who think what's the ball, what's the strike. However, it's ultimately going to be my decision or the plate decision. And so really make sure that we're in line, we're congruent as because we want to support you the best we can. And now my team has grown. There's 5 of us now. So if you don't reach out, you might hurt yourself in terms of scoring and everything. That's really another important thing. Okay, let's start the fun now. Donated conveyed property. It comes down to 2 things in the blue. Is it donated by the federal government? And they're giving you the money, they're giving you the land. And we go by 20% of the units where they might donate like parcels of land and are like 20% of the parcels. donated. And the other one is where like Alex has a piece of land. And I said, Alex, no, we're friends. No, can you give me a discount? And Alex says, okay, I'll give it to you for 50% off. Well, that 50% discount would qualify for donated property points, like 2.5 points. Now, how do we determine the value? We'll go by the by appraisal. The key points, um, like it has to be conveyed by someone who's not related or affiliated, with anyone involved in the project. However, there's a caveat for property owned and is being donated by a housing authority to a city or county, and that really involves where they're donating land to make a project work. And the third, the second bullet point under key points. This is where a lot of projects lost points. We say long-term lease or more with a nominal rent payment, and there's no upfront payments or additional rents. Well, a lot of people said they were going to do it, but there was like $2 million upfront payments, no, $2,000 annual payments. So please review your leases before you submit the application. Okay, not-for-profit government sponsorship. Well, it's 5 points if you're not 501(c)(3), you're a government, or you're a Native American entity. Now, the key thing is the developer fee, because the developer fee does impact the points. Now, let's say Dimitri is going to develop a project and he doesn't want to take a developer fee. Well, if he doesn't take a developer fee, you still get the 5 points. Um, let's say, Edgar's developing a project and he wants to work with me. And then he says, Steve, I'm not giving you squat. And so if it's less than 25%, that project will only give you 2%. Now, maybe I'm working with Tangela and she's nicer and she's going to say, Steve, I'll give you at least 25% of the developer fee. Then we get 5 points. And so the other key things is the project sponsor must be an owner and you must have an ownership interest or the ability to control. Now, if you are a owner occupied project, you're not going to have an ownership interest, but you should be involved in the financing, organizing the project, qualifying tenants. You're really going to be involved materially in the deal. Okay, good question from Nicholas here. Is a developer fee points additional to being a government or nonprofit profit entity? No. The developer fee points is something that you get, but you could lose points um, like if you're government, if you're like the city of Dallas and you're taking a developer fee, I mean, you get the 5 points. But if there's no developer fee, you get the 5 points. However, again, you could lose points if you're not receiving 25% of it. Income targeting. This is, I like to think of a teeter-totter in a way where if you have a lot of very low income people on one end, your score is going to be high. But if you decide to put a lot of like moderate income people on there, your score is going to decrease. The key takeaway is the third bullet point. If you target at least 60% of the units for families less than 50% of AMI, you get the 20 points. What does that mean? Please don't put 100% of the units are below 50. Put 60% because this, based on my experiences with compliance and monitoring, there will always be people who are going to be above because you might have different intake people, different, property management, and there could be a mistake. So you build in flexibility. Or the other thing, maybe you're serving a homeless population and someone comes in and they're making 61% of AMI, you are not going to shut the doors on the person, say go away. No, you're going to find the way to help them. So please create that flexibility to accommodate that. Now, if you have managers units, you must include that, and they are going to be market rate for 80% of the unit. Now, another thing I've been seeing recently is people are included in make ready units. Um, that can't be, or they are just, you know, switching units between an office and a bed or an apartment is dependent on their capacity. That's not going to work. Um, if you commit to like 100 units, there needs to be 100 units. And if you have a manager's unit, you're going to have 99 AHP and one market rate. So please keep this in mind as something like this could lead to a recapture because of the non-compliance. And we see this a lot with deals where they might say, okay, we're going to do 50 beds, serving maybe a homeless special needs population. And then we go visit, and then we're going to see there's only 45 beds. Oh, yeah, we decided, no, just to use some of these other rooms for something else. That's really not going to work. And so always remember, you could go higher, but you can't go less. Please keep that in mind. Economic opportunity. No, this is a busy slide. So the one on the left, all projects could get employment, daycare services, after school services, mental health and behavior services. Now, rental projects can only get financial literacy and residential services coordinator in addition to what's all projects. Owner occupied, you get points for counseling, maintenance for rehab, and sweat equity for new construction like habitat projects. Now, overall, the maximum points is 5. And again, the memorandum of understanding, we're really looking for that. Um, Last year there was 2 projects where I took away empowerment services points because they had services that were not, compatible with the population being served. And so that's why it gets back into if you could talk to us before you do the application, and I'll do this shout out to our members. Members, if you want us to look at the applications and set up time, we are more than willing to do it. Because again, we are here to help. We like picking up the calls and we like to answer emails. And if you get something from me, it might be at 5 o'clock in the morning or 7 o'clock at night, but we do like to answer. Okay, quick question here. If services are provided in-house instead of a third party, do we fill out the MOU? We need to see that you have the capacity and you've been doing it for a while, and it's not something where you're bringing in someone in once a week to do it. We've seen like with homeless projects, where is this part of your build up, your services? So yeah, we have flexibility in that. Um, okay, and then there's a okay. Then someone goes, well, if Steve, you gave me money and I'd like it, but I can't use it all. Well, if you don't spend as much as budgeted, we're gonna look at it one or two ways. One is we're gonna say, you could give us we might just take the money back. Or two, what we're gonna say is depending on it, like, you could take that money and maybe get better cabinets, better furniture, or, look at it, or maybe possibly if you have some loans. But again, it's not a blanket yes or no. There are just variable factors, included here. Okay, this is an example of the homeless household. Um, oh, okay. I jumped here. Okay. Underserved communities and populations. This is 15 points and you get 5 points possibly for each. Rural, it's just based on USDA property eligibility, and you can see there's a link, or if you go on the USDA website, you can find out. Homeless households. Now, this is very important. To get the points, you got to be 20% at least. Now, there has to be a minimum 6 month stay. So if you're having people staying there like for 2 months, 3 months, and it's really transitional, you could still apply. Again, apply, but you might not get the points because it's more, the definition is more of like a 6 month stay. Now, we look for leases, and someone will be like, Steve, man, we don't do leases. I'm be like, okay, do you do participation agreements? They might say, yeah, we could do it. And then I say, well, make sure the agreements say, well, they can stay up to 6 months. Really keep that in mind. Special needs. I One of its households with elderly, and based on my career, I finally qualify it for elderly. And then we have the other bullet points. The key thing to keep in mind for the points on the right-hand side is it's based on percentages. Now, even if you're 100% homeless or 100% special needs, please put greater than 60% because things happen where sometimes people qualify someone as homeless where it doesn't meet our definition. And so, and you want flexibility. And likewise, again, if you have someone coming in who might not meet some of these, you're not going to shut the door on them and tell them to go away. You're going to find a way to help. I mean, this is the business we're in. So you want to have that flexibility with it. Now, again, the very bottom point, we have a template to show how someone's going to meet our definitions, and I'll go into it. Um, the key thing with this Our Homeless attestation that it's in our format and you should use it for residents who are going to stay. Now, please note, our homeless definition is for chronic homelessness, and so it is not imminent. Or living with like a family member is a little different from the HUD definition. And I have found over the years that projects were not reading the implementation plan, so we created this attestation to help projects, so upfront, what we're looking for. The person question here is, are trafficked victims covered under special needs? I will see. I would say yes. Um, because they would fall more under the domestic dating, and they would fall under that area. Okay. Community stability. This could be up to, it's going to look like we got four things, all at 3 points in the top, and there's also preservation. So this looks like, oh, wow, I could get 18 points. However, the max you could get is 15 points because for adaptive reuse, new construction, rehabbing properties, or demolition, you could only get points for three of them. So you can't claim, you could claim all four, but you're only going to get 9 points. That's another way to say it. And then I'll cover presentation in the next slide. Adaptive reuse is you are converting an existing non-housing structure into housing, a hotel, assisted living, a school. Now, when you do your application, at the end of the month, it still needs to be the former structure. Like if you try to apply and say, well, we converted this from a like an old mail center 2 years ago, that would not qualify for points. So think of your structure has to be as is. New construction, that's new construction. Jeannie wants to know, where can we find guidance on economic programs? If we are going to provide a professional resume building class, how often, if you're going to be offering these professional services, they should be offered annually. Because the point of them is to really empower residents, and the point of it is just not to do it once to get the points. Really looking at this long term with it. Now for rehab, the building needs to be 50% vacant, which could be units or square footage. And for demolition is the best way to describe it is you have land and the first four lots are vacant and you have the lot where the old apartments and you're going to demolish it. Well, we are looking for the apartments to basically be rebuilt near where in the structure that you demolished. So keep that in mind. Now, interesting thing that came up because we did mention that, you know, the way our system is set up, you have to select whether it's going to be rehabilitation or new construction because you can't do both. Now, with that being said, if you have a project that has some rehab components and new construction components, and if a state housing finance agency or home fund, CDB, if other funders are treating it as one project, then we're going to treat it as one project. And however, what we're looking for is not looking for is someone trying to combine like 4 or 5 different properties so they could score well for rental housing. That's not going to work. And that's something we could discuss, but the intent again is just not to group separate projects just to get the points. However, like I know we have something in San Antonio where they're looking to do group homes, and they are 5 separate homes, but it is really one part of one project. And so with that, what advice can I give a new nonprofit agency that is just getting into transitional housing and do not have a past history? Well, one thing is you might want to work with a corporation for supportive housing, CSH. They are one of the national providers. Second is we do know of some consultants that can help you with the application. And the one thing about our money, if you hire a consultant to help, our grant could pay for it. So you could reach out to us, um, and we can help you with that. Um, um, Mr. Anonymous again has rental projects and developer fees. What would be an example of a developer and sponsor in terms of roles? Is the rehab contractor considered the developer? No, the rehab contractor is not the developer. I think in that case, the sponsor would be the developer. Now, think about it. The best way to think of a developer is the developer most likely won't be a 501(c)(3), and they are getting more than 75% of the developer fee, the roles. And sometimes the developer they're the one getting the zoning, they're applying for different funding. They're really doing a lot of I would say, grunt work. And so you could do about your day-to-day jobs. And then well, I thought Alex was going to help, but I don't know what happened to Alex, but I do know he's okay. Let's do preservation. Right. Okay, here it is. The deadline period is a 1 year look back, and it's April 30th, 2025, and then 2 years, April 30th, 2028. So you must have some HUD Section 8 or PRAX or reaching the end of the tax compliance period, or you have expiring USDA rental assistant contract. So we are looking at that. Is, it needs to be that benchmark. I know last year we seen a lot of projects saying that things are subject to renewal every 5 years, but we're going to have to look at that closely as, we're really looking to see there's an hard and firm date with it. And the other thing is you have to commit that you're going to preserve all the units, afterwards. You are going to keep them affordable. Now, RAD has been around for a while, but if you're a program and you're participating in the RAD, where you're either replacing, obsolete units or you're putting people in new renovated units, you could qualify for here. So these are the two things for preservation, and these are the things where you could get a possible 6 points. Now let's go to bank district priority. We got 6 different buckets. Now, first-time home buyers, you have your own bucket where you could get up to 100, no, 5 points. Units located in our district, I'll go in more into detail. Rental projects, that is based on size. The bigger you are, you get 5 points. If you're in the medium, you get 3 points. Or if you're 10 to 25, you get 1 point. I do want to point out that if you are doing a 4 unit project or a 6 unit project, you are more than welcome to apply. However, unfortunately, you will not receive the points. We have climate resilient building standards and subsidy per unit. That's very important. And then the final one is if it's a native housing project. So bank district. So I want to add that if you are located outside of our district, you can apply. You're just not eligible for the 5 or 8 points available. You either could get 5 or you could get 8. If you're in Arkansas and New Mexico, you're eligible for 8. However, if you look at the approved projects, even this year, Texas was so dominant, so people don't be dissuaded by it. And because historically, we just don't receive that many applications from these states, and that's why the points are there. Okay, again, we're going back to my teeter-totter thing. If you do $35,000 per unit, you are going to get the 5 points. Now, if you decide to do lower, your points begin to decrease by some decimal. But if you get to $45,000 per unit, you're not going to receive any points. And historically, maybe over the last 5 years, maybe 1 or 2 projects did get approved, scoring to 0 on this. Owner occupied, you have a little different threshold, and that's $15,000 per unit. That's your max. Okay, climate, resilient, and greenhousing. You either could get 7, 5, or 3. And so for multifamily gold, you get 7. If you are fortified silver down to the HERS rating, you get 5. And then fortified roof and Energy Star certified home building, it is 3 points. Now, I do want to point out that there are some new construction trying to combine rehab into the deal. You will struggle with this category because you have to select one, and the implementation plan reads 1. So keep that in mind as you are trying to size out your project, as you're trying to put together. If you do have questions, please reach out. We'll be more than glad to walk you through or just provide a response more specific to your project. And this slide shows examples of the certifications you get and how it works by project. Okay, helpful hints. Best way to say helpful hints is ways not to do your application incorrectly. The key things are here, and I have a little friend, um, Mr. B. As Alex likes to say, if Mr. B shows up, you better be paying attention. Okay, first thing in red, you need to find a member. And if you're getting tired of my voice on this webinar, you could talk with us and you don't have to talk to me. I got a team of 4 people, be more than glad to help you. Um, know your funding source, valid development cost, and I'm pausing here because organized supporting documents. Um, one thing I'm looking at, if the documents are incomplete or you submit only 5 documents or less than 8, or you submit one large PDF and there's a high chance your project would be ineligible because there's been times in the past where stuff is submitted and we're like asked to figure it out. This year it's going to be more incumbent on the applicant to get things organized as because for years we've been sending out multiple clarifications and if we have to send out more than 8 clarifications on your project or 10, again, that's going to be a possible cause for an ineligibility. So please keep that in mind. The last 2 things are when you do the application, there's a page called Member Contact. You need to enter the right email because when you complete the application, this is going to go to your member and they're going to be notified via email. Well, if this ever goes into spam, you need to call them. But nowadays we're all texting, so you can send them a text. Call them or text them that this application is ready for them to review. Again, I'm just highlighting the important points here. Okay, how to improve your application. Well, one, provide a detailed project description and findings and summary. If your project description is 1 paragraph of like less than 4 sentences, that's not detailed. And if you don't describe how you're going to finance the project, that could possibly impact your application. Very important. The numbers and dates and addresses and supporting documents, they should be the same. We shouldn't be the ones finding the discrepancies. Help us understand. Um, I will say on our webpage, we have a technical assistant guide for rental as well as home ownership. And both of them contains a sample application so you know what to look for, but they also provide examples of the supporting documentations. So please, download them and just look at them. And the fifth point, again and again, please talk with us because really, if I had to kind of pick the applications that did well last year and the ones that didn't, it was the ones who didn't reach out to us that really um, so, Mr. Be Anonymous, and can you confirm that 53 projects were funded last year? Yes. And I even have it in writing, and that's in one of the earlier slides for that. And again, accessibility, make sure your member contact is available when you're submitting the application. Okay, here we're getting into the point where I spoke about we have our development budget template and we have our uses of funds. So the information from your development budget, you're going to input it to the uses of funds. So when you get to the page, you're going to see all these acquisition, pre-development, all those check boxes really go back to the development budget. Like think of it, those are the parents. and everything below it are going to be the children. Mm, So the all correspond. No, the items in red, it's hard to read, I'm sorry, but what this tells you, it's like because you have to break out cost between AHP and non-AHP. So the sum of your allocations for AHP need to equal your grant amount. And likewise, the total project cost should equal what's on your project description page. And one of my best recommendations is please prepare your budget before you start the application. So here we are. This is the high level. These are all the parents involved on our development budget. Um, and the values shown on here, these are non-editable fields because they're going to be like you can't edit the parents, you can only edit the children. And I'm going to go over the next slides a little bit more in detailed. And this is required for all projects. If you don't complete your uses of funds page, you're not going to get very far in the application. Again, this is an important note and where you can find the uses of funds that is in the uses of funds and development budget, and the template is now available on the website. So here, these are an example of the subcategories. On the left-hand side in green, the green represents the children. The red represents the parent. Now the items in green are going to add up. Now, very important what I mentioned about the AHP amount and the other sources. They have to not so much match on this, but when you get to the totals at the bottom of the page, they're going to need to add up. And I think that was, I'm going to go back here. Right here, when I mentioned this, the total amount funds must match this amount. That's what I was referring to. Okay. Every one of the children, they're edible. Again, as I mentioned, these automatically tabulate. Again, as I mentioned earlier, enter the amounts allocated for the AHP and other sources. And the very bottom in green, like these numbers keep adding up as you go ahead and you complete the page. And the very bottom and the dark green, I know it's hard to read, but that's where it's going to tell you if these numbers don't agree. Again, these arrows really kind of summarize what I've been discussing so far. So please, review this. And if you have questions on this, and this gets me to another point, if you are doing the application and you are struggling, um, one, please reach out to us because again, we are here to help. But then we're able to go into the application and actually look at it where you're at, and then we could troubleshoot. We also have, a great development team that supports us, and they're also able to help because sometimes they're just nuances, but we always could troubleshoot. And again, when I get back, you want to start your applications early because if you wait to the very end to do the application and you say, oh, I got a problem, 24 hours might not be enough time to debug it or kind of get into your situation. So again, I'm clapping my hands, start early. Um, please don't wait to the last week, start early because the longer you wait, the less we can help. So keep going. Now this is my favorite with the development budgets. Well, now our system is built. Your sources and uses do have to agree, but that total development budget that you're going to put together, Make sure it's equal. But what's interesting, we see this a lot where someone will upload a total development budget as supporting docs. It doesn't equal the sources and uses. So, um, it's like, the phrase Houston, we got an issue. That's an issue. Um, Another one is like someone to put down acquisition cost of like 1.5 million. We get the support documentation. It says 2 million or 3 million. Um, we can't figure it out unless we get your help. So really, make sure you follow that. Um, the rehab cost and your construction cost, they equal to your estimates on the cost provided. Again, what's in the application should really equal what's in your supporting documentation. And kind of just to speak over again, we should not be trying to reconcile this. And if we have to do a lot of reconcile because the information is just not complete, again, the eligibility could be a factor because we're not going to do the application for you, but you need to complete the application and help us understand it. Um, and the final point, all major costs, including the acquisition, contingencies, financing, they all should be listed. Like, don't leave off costs on there because we want to know the whole cost. And again, in the final hint here, like, because we like drawings, that really helps, especially understanding like group homes or homeless shelters. And but also your pre-inspections and your physical needs assessments, they should have enough detail to allow you to really obtain, you know, detailed construction estimates. Um, so here are the key points for required documents. Um, they must be uploaded prior to submitting to the member. Again, if you're uploading 25 or 30 documents, you are going to have 30 file names and you're going to have at least 30 descriptions. If you wait till the last 2 days to do the application, you might not get it in. Or if you feel that you could just do 10 of them and then maybe send them to us later, that that's not going to be would not be deemed acceptable. We can understand some documents not being available, but if you're just trying to submit 10 out of 20 just to get the application in, um, again, you need to start early. Um, you upload everything now through Grant Connect, and you're going to send them again as individual PDFs. Please don't send us a 100-page document where everything wrapped in where we have to break it out. Um, this give us a summary and you know I mention it again and again, we should not have to reconcile conflicting information. Please review it before you submit it. And one of my favorite is the source of funds. Like, you'll put down 1.5 million in CDBG funds, but the word letter says 1.75. Or you might have a permanent loan on there for like 2 million, but your document says like 1.75 million. Please really take the time in to review it. And at the bottom, we have our technical assistant workbooks that you could use. And what I'm going to do just for a moment, I'm just going to take a look in the chat to see if we have anything um, open. Okay, okay, well, it looks like we're doing pretty good there. And I'll be told about Mr. B saying, what is a modification? Well, best way to describe the modification, and this is going to get into special needs and homeless points. Well, it's more than changing a score. You're going to have to demonstrate good cause. Like, why can't we do it? Um, it's not going to be, well, another funder. No, this happens a lot. A project applies for the homeless points of special needs, and it's a light tech deal. They come in and, well, they come back to us. Well, the underwriter doesn't want us to have the points. Well, this is something you need to check before you submit the application. Is this going to be acceptable? And what we've seen for good cause, it's really like we've had to modify projects where we reduced the units because at one point 20 million was good to build 50 units, but now that 20 million can only build 40 units. Or you have a property located on Main Street, but it's eminent domain and you have to move the property. Those are the things because, again, for the final point, remediation of non-compliance is just not a good cause. No, what I will say is there's been applicants where they've been being approved and they're coming in for like modifications to reduce like special needs or homeless commitments. Well, one of those is if projects have a history of those being reduced, those points might be, I might reduce them this year. And so where I'm really going to look at the special needs and homeless is this something you have the capacity to score, or is this something that you're trying to reach for points? So really think it out before what you are attempting to do. As I mentioned earlier, FHLB Dallas is spelled differently from TDHCA, from Louisiana Housing Corporation, ACFA, and the Mississippi Home Corp or the New Mexico Finance Agency. We're spelled different. And make sure that what you're committing to us, it's in agreement with your other funding. Because sometimes we're a great fit for a project. Unfortunately, sometimes we're not a good fit. And in nowadays where you as developers, it is hard because you have to deal with so many different funding and you just can't do it with one funding source. So it's difficult and we understand it's difficult. And again, we could work through it with you, but just really um, think it through. Into the second bullet point, what I mentioned previously, talk to your other funders before it goes to underwriting because it has happened and it's been more frequently now, especially with the changes with the funding from the federal government and things being unstable. A lot of large underwriters, equity providers, they're really scared because before, you had that firm commitment that this money's going to be there, but now there's talks about funding being withdrawn and things are just not stable. And so it's really important. But this is one of my favorite slides because you see on the left-hand side, this is what the applicant did. We're going to do 56 very low and 36 low. Well, if you look on the right-hand side, this is different. And so your commitment needs to match what the other funders are doing and with it. So please keep that in mind. And if there's something needed we could discuss, and what happened with this one was we had to do a modification later on it. And that's what we're trying to avoid is modifications because information wasn't disclosed properly. Okay, here's the timeline. Again, we opened March 31st, we closed April 30th. Um, Most of the summer, we're looking at your apps. Fall comes and we're going to have our board of director approve those applications. And then we are going to send out the award letters. Um, Now, the third point under approval, we send out the agreements. In the application was one of the changes was we would always capture the corporate secretary information for the sponsor, but now we're going to capture it also for the owner entity. And one of the things is when we send out these agreements, you need to have them back by the end of December. And one of the problems is we send them out Adobe Sign and then we get a lot of requests. Oh, well, we put the wrong information in or we didn't get it right. Well, please get it right. Please do the homework and make sure it's right in there. Um, if you're lucky to be approved, there's progress reports that we send out annually. We really mentioned that you um, work with Tangela, Edgar, Alex, and Dimitri. Communicate because they do like to help. It's in their nature, and so please, take advantage of us as resources to you. Um, the deadlines for completion, it's 4 years typically, but if it's on a Native American land, it's a 6-year completion deadline. And just really to, factor that in. Okay, now where do I start? We've seen questions, where do I start? Well, first, you're at the webinar, you're in a good spot. Secondly, reach out for help and get a scoring review. Get familiar with the IP plan. Um, use the rental workbooks because they have examples and the owner workbook of what we're looking for. And finally, most importantly, you need to find a member. And I will add that if you're looking for a member and you reach out, sometimes people reach out to us. If you reach out to us the last week of April, um, many members won't, it'll be hard for them to support the project because they haven't had time to get to know you or understand your project or understand what you're looking to do. Okay, this page gives all the resources that's available on our website. Here we have this is available on our website and you can self-score. Go through it. It covers both home ownership and rental, and there's a link for it. This slide really to summarize is the way we annualize income, like if you're doing rent rolls or trying to understand how we do it, this QR code or this link will give you a good understanding of how we look at it. But we are consistent with like the HUD definitions of what's included in income or what's not included. One thing is we don't factor in assets because I know for LIHTC and even some other, federal government, you have to factor in um, assets. And a lot of the new changes that came across with uh, I think it's Hatma. Yeah, so really, keep that in mind. And go here. Okay, this is one where, we're getting close to the end, and I really want to focus on the Grant Connect system because Grant Connect is where you access the application, where you complete it, and where you upload documents. Grant Connect is sponsors and consultants must have their unique user ID and password. I'll go into that. Um, if you're new to the AHP world of with the Federal Home Loan Bank in Dallas, first, we welcome you, but two, you're going to be a first-time user and you're going to have to register. And it opens up March 31st. The application round opens up March 31st, but the minute this webinar finishes, you can start registering. So to keep that in mind, you could register before the deadline, before we open, because if there are issues with the registration, our support, our development team called 404, they can help troubleshoot. And it's very important that you do it early because as the volume increases, as it always does towards the end, it's harder to help. Okay, here are the key points for registration. Okay, it's located on our website, the Grant Connect, where to access it. Okay, and here are some other key points. All users, you need a username and a profile. And what happens is people could register and you could register, and we're more than glad to help you with it. However, once you're done, is you need to be affiliated with your organization. Do you work for Sycamore Development? Do you work for New Hope Housing? Or do you work for Gulf Coast Housing Partnership? I mean, do you work for these organizations? So you're going to be affiliated. Um, if you're brand new, again, you create a password and you can do affiliation. Now, if you have maybe not used the program in a couple years, don't create a new registration. Reach out to us because what we could do is we could reset it. And when you call us, please be near your computer within the next 2 hours because you do get an email, but you have 2 hours to complete and update it. Okay, they're non-sponsor consultant. These are normally going to be the developers. Now, if you are having an organization help you with the application, the non-sponsor is going to register, the consultant is going to register as a non-sponsor. So they're going to do that. Now, when they're going to affiliate it, now what we see a lot is the consultant tries to register as a sponsor. Now, if a consultant registers as a sponsor, you're going to create a big problem because the sponsor has to certify to the wrongdoing, not the consultant. And then at the very bottom, if you look under members, and I should have maybe put this at the higher point, is there's a pin. So whoever creates the application is going to be a pin. And whenever this application is going to be forwarded to a member or a sponsor, you need to give them that pin. I know I mentioned earlier, okay, yeah, you can send a text or an email. Please include the pin number because now there's times where even it's towards the end and the member's like, I don't have the password and I can't get a hold of the sponsor. We have the ability to go in and look up that pin so we can help you with it. Um, so here, make sure you select yourself as a sponsor, non-sponsor, or sponsor if you're not the member when creating a new profile. Only select member if you are directly employed by one of our member banks when creating a new user profile. Because we see this a lot where a member will try to register and then they register under their bank. However, when you get on the registration, it asks the question, are you a sponsor or non-sponsor or a member? Make sure you select the member because all members already have an existing account and you just have to affiliate it with it. And again, the new account registration is not complete until one, you're logged in and you're affiliated. Now, after you're affiliated and you register, we have to approve it. And we try to do it within 24 hours. So once we approve it, you will get some notification that it's okay. If you don't get any notification, please reach out so we can help. And here I'm going to talk about an application that's done by a consultant. Here, the consultant, they're going to start the application, they're going to get the PIN, do the application, and then after they're done, they're going to submit it to the sponsor. Sponsors are going to be all excited. They're going to get the PIN and they're going to go in the application and they're going to review it and say, this is the best application ever created. And then they're so excited, they submit it to the member. The member is like, oh, I got an application. I'm so excited. And then, oops, I need the pin. So you go and you give them the pin, and then they're going to review the application, and then it gets to submit to us. Now, I do want to point out that if the consultant submits to the sponsor says this is not right, you have the ability to reject it. And when you reject it, it goes back to the consultant. Likewise, members, like someone reaches out to you and they tell you about the greatest project in the world, it's going to do this, serve this, we got this, and then you look at it and it's totally different. You have the ability to reject it, or you have the ability to reject it and tell them to update it. And for the sponsor, this one summarizes what happens with the sponsor. Similar thing, they create, they initiate, and the member approves it. Let me go back to this one here where Mr. B. What it's saying is if you're a member, you can log in anytime during the application process and see who's doing applications where they chose you. Because sometimes you might find sponsors who chose you and you're not aware of it. Likewise, if you're a sponsor and you're doing multiple applications, because I do want to point out a sponsor could do more than one application. You could find out all the applications that are out there. And so this allows you to show whether the application is complete, whether it's being submitted, and how is it moving along. I just want to look at something here. Okay, good. I'm back. Here are some tips. Please be advised that this is the location. We have a multi-factor authentication. Don't wait to the last minute. And this is the number where you could call for help. Again, what I mentioned before, if you used it in the past and you haven't been here in a while, call us and we can reset the password. And this is where I mentioned a 2 hour window. If you don't complete them within 2 hours, this all goes over again. This is the fun one in the world of FHLB Dallas. You have to use Chrome as your browser. If you use Microsoft Edge and Internet Explorer, they're having issues with Grant Connect, so the only one that gets along with Grant Connect is going to be Chrome. Now, things happen when you go into the application and you might see this. People don't probably remember the RoboCop movie where his eyes would flash, but you get that thing where the eyes are flashing like a screen. That means a couple things. You're going to hear this response that clear your cache. And if that happens, sometimes that clears out your browser where you could actually go forward with the registration. Um, if you create a password with special characters, you might see a spinning circle and as this spins and it's not going to accept it. So these things are really to keep in mind as you go through the registration. And just to recap, here are all the roles of everyone and what they need to do. Your next steps, you need a member, consultant does it, or the sponsor. This is where you need to go to register. To call them or send them a text and make sure you include the PIN. I think this is time for any questions. And I am not seeing any. See here. Okay, yeah, we do got one. Thank you for this. And I just want to go down. Yeah, one thing I do want to point out, and just kind of going through the questions, if your project's under construction, like you're 50% complete, you're 80% complete, you are still eligible to apply. And as long as you show the gap, and that's going to be likely, costs have gone higher. Or another thing we're seeing is with the higher interest rates, the interim financing has really gone up. So that's an extra cost. Or we might see it where you thought you could do the project with 1.5 million in debt, but now you can only do it for the only way to make this thing to cash flow, it has to be 1.2 million. So we've seen a lot of that. So just don't think that you can't apply because of that. Um, yeah, again, we do have in our work technical assistance, we do have copies of the application. Now, I do want to point out with that on our website, we have a copy of an old pro forma too that you could use. And then also, if you use the workbook, there's a bunch of like answers that require um, text information. Well, you could do all that stuff and do it in Word. Do it on the side, do your pro forma. So when you get into the application, you have all the information. Now, the other thing really to keep in mind is there's a 15-minute timeout. So you're working on the application and you happen to get a phone call or someone sends you a great video that you're going to watch it and it takes 16 minutes. And let's say you're working through the uses of funds and you're 98% complete. Well, if you don't come back to it, you lost your information. Um, or likewise, you get a call from me, and I could talk more than 15 minutes. That's for sure. You might lose your information. So just really keep that in mind that you have to, you could be knocked out, and the system will let you know if you're going to be kicked out with it. Um, okay, if someone asked that if we approve the application, how long does it take to get funds? Well, there's two things they're going to be well, three things. One, we need to sign an agreement. Two, we're going to need to see at least 10% of the hard costs are complete. And finally, all your funding is secured. So if you have a project and you haven't secured all the funding and you start it, we're not going to release the funds until everything is there. Okay. Now, again, I think I mentioned out with the performas is if you go if it goes negative in year 15, year 14, you're not going to be able to submit the application. And I know this is hard to visualize, but one of the changes we made on the pro forma, you have like annual income, the rental income, the vacancy, and other income. And there's something for, but now we've made it where if you're going negative in year 13, 14, and 15, you could go into the other income for year 13 or 14 and add supplemental money. So because well, negative trending, that happens because things go negative because people use a income escalator of two and expense escalator of three. So it's an inverse relationship. But just know that you have that ability to make those alterations so you have flexibility because I know a lot of times projects keep operating reserves or social service reserves and you're able to take that money, put it into the project. So now you have that flexibility. Okay. Other than that, we have our contact information. You know, you can contact us, 800. You send an email. Um, and then this is our contact information. You can reach us at the 800 number. Again, the email, and this is me and my team. They're great. I mean, I think one thing they have a heart to help, and they do care, and it will show in it. So, please reach out. And the reasons why we don't give direct numbers on here is, you know, someone could be out and you might need help, or they're working with a client. So someone will always respond. And with that, I'd like to say thank you for coming out today. Thank you for listening. Um, I would say about 3 o'clock, I expect to see about 40 registrations in Grand Connect. Um, just to reiterate, reach out before you submit the application, call about funding, not funding, call about no scoring with that. And I wish you um, good luck and have a great afternoon. Thank you so much for attending.